JPMorgan Chase Co is a financial holding company which provides financial and investment banking services. Market cap here $250.6 billion US.
Right, this is the biggest of the banks, and really with Jamie Dimon at the helm has emerged as kind of the sector leaders. It's the alpha bank, I think you could say, in the US market.
Price to earnings ratio 12.6 and a dividend yield here of 2.6%. Let's have a look at the share price graph so it gives us some context on what has happened post the Trump victory. And there we go, the rally at the end, which saw these stocks buoyant yesterday.
Yeah, so basically a big 6-7% surge, and that was across the board, even Wells Fargo, which is the one beaten down. And I think it does relate to concerns that, Glass-Steagall would be, reintroduced, all that regulatory stuff. Now, is that gone?
Yes, it looks as though that's off the table. I mean, understand once again, this is the net consequence of what the market thinks is going to happen. It was quite clear that if Hillary Clinton won, regulation was coming. Regulation by banking services, regulation in pharmaceuticals, all of these things. Now it appears to be off the table. And I think the market could actually be right on this one. I don't think they're going to come with big new banking regulation, but they're not going to reverse the regulation that's in place either.
I do want to just chat about Wells Fargo because we chatted about it given Buffett's big stake in that play. What happened to Wells Fargo yesterday?
It was up about 4%, so not quite as much as the others, but it just generally got the same lift. Look, I think it is interesting because the banks are positioned well currently. There's going to be a rise in interest rates, it seems. So that's also now on the table. Will Janet Yellen's Fed raise rates at the beginning of December? Probably they will.
In fact, they're projecting a number of interest rate hikes out of the
Which is marginally positive, I think, for the banks. So net, I think this is probably good news. And we know, of course, Donald Trump likes debt. He likes funding things. I don't know if I'm stretching the point a little bit too far, but the sense that banks will be encouraged to become net lenders in an expanding economy.
One thing's for sure, he may bring in a wave of private sector players to run
the administration.
Is that a bad thing?
No, it's not a bad thing, and he's still got to obviously announce his administration. But another very important point which the market seemed to have missed yesterday was quite a dramatic rise in developed market long bonds. Now, in my view, they are the net loser. However, it actually suits the banking system because they can invest money in a long bond at a high yield, but only they pay their depositors a far lower rate. This is called the steepness of the yield curve. And what's happened now in the US is that they've got a very steep yield curve. In other words, the long bond is much higher than the short-term rate, which is good for bank margins. There's another reason why the banks ran strongly yesterday.
Hot or not on JPMorgan?
At the current PE of 12, I would say hot, yes.
Paul, hot or not?
Yeah, hot for me. And I think you just should be careful. Banks globally have rallied. Here in South Africa, FirstRand Nedbank trading at recent highs. But one's got to be a little bit concerned about our banks because they've got their own issues. Just keep that in mind. It's not across the board hot.